everyone, I'm Nasha. My matrix number is F1024. I want to explain about audit expenses, but before we can talk about that, we need to understand what they actually are. In simple terms, expenses are the costs a business or an individual spends to keep operations running and an income. And they reduce profit while appearing in the income statement. Knowing what counts as an expense is important because it helps us track business performance and ensures financial statements accurately and reliably. Some common examples include salaries paid to workers, rent for offices or homes, utility bills, buying raw materials, and transport costs. Now that we know what expenses are, let's look at their nature and how accounting standards treat them. Okay. Expenses are recorded to measure the costs incurred by a business in generating revenue. They help us determine whether the business is making a profit or a loss during a specific period. According to MFRS 101, companies are required to prepare their financial statements using the accrual basis of accounting, which means expenses are recognized when they occur, not when cash is received or paid. For example, if goods are sold in April, then the related cost of sales, wages, and delivery expenses must also be recorded in April, even if the actual payment happens later. This principle ensures that financial statements reflect the true financial performance of the business in the right period.
Assalamualaikum, my name is Muhammad Najmi Shahmi. My number matrix F1033. Today I will present about audit assertion. First, occurrency. The expenses recorded actually occurred and related to the entity. The auditor needs to ensure that no fraudulent or fraudulent transactions are recorded as expenses. For example, there is real receipt or invoice. Second, completeness. All expenses that should be recorded have been recorded. The auditor needs to check for unrecorded liabilities or omitted expenses. For example, if no expenses are missing or forgotten. Third, accuracy. The amount of expenses is recorded correctly. The auditor reviews supporting documents such as invoice and receipt to confirm the correct amount. For example, if the expenses is RM3,000, don't write RM30. 4. Cut off. The expenses are recorded in the correct accounting period. The auditor evaluates whether year-end expenses are included in the correct period. For example, December 2024 expenses should not be in December 2025 records. 5. Classification. The expenses are correctly classified in the appropriate expenses account. For example, distinguishing between operating and non-operating costs. Next, I will present about accounting treatment. I'm already write two account, expenses account and account payable. Expenses account records all the operating costs of a company such as rent, salaries, utilities, and supplies. They are recorded when service or goods are received. Even if payment has not been made, these costs are important because they continue to reduce profits. In an audit, we check whether the expenses are real, the correct amount, and recorded in the correct period. Account payable. Account payable is the amount a company owes to supply for goods or service that have been received but not paid for. It is recorded as a liability on the balance sheet. In an audit, we make sure that this debt is real. Match the supplier invoice, is recorded in the correct period, and is fully disclosed in the financial statement.
Assalamualaikum and a very good morning. My name is Nur Ala Sofia binti Muhammad Zahid and my matrix number is F1071. Based on situation 1, having proper separation of duties helps prevent unauthorized cash payments. For example, the person who approved a purchase should not be the same person who handled the payment. Also, the people in the accounts payable department who request the payment should not be the ones handling the actual checks after they are printed. This helps reduce the risk of fraud or mistakes. Now, we go to situation 2. The auditor is worried that the client might have recorded a cash payment even though no money was actually paid. This kind of mistakes can happen for a few reasons. For example, a check might get lost or stolen before it is sent out. To prevent this from happening, the company should have strong controls, such as first, making sure different people handle different tasks like writing checks, recording payments, and checking records. Second, regularly checking vendor, which is supplier, statements. And lastly, doing monthly bank reconciliation to make sure the records match the bank statements. Furthermore, as we see situation 3, keeping track of the number order of receiving reports and vouchers either by hand or with a computer helps prevent fake purchase transaction. It makes sure that the only properly approved documents are used and anything with a wrong or missing number can be checked. Also, marking or cancelling all documents after use helps make sure that the same purchase isn't recorded or paid for twice. Finally, lastly, for situation 4, the auditor is worried that the fake purchases might be recorded in the company's accounts. If this happens, it can make the company's assets or expenses look higher than they really are. A fake liability, money the company owns, will also be recorded. In the end, a payment might be made, usually to the person who created the fake purchase. This is why checking if purchases actually happen is important.
Hi and Assalamualaikum to everyone. I'm Aina and my number matrix is 06D8023F1027 and I will talk about audit procedure in auditing expenses. Firstly, document inspection tracing. Auditor will confirm the accuracy and completeness transaction recorded. Document inspection is to analyze record of such document to ensure expenses is actually happen. Meanwhile, tracing is analyze record of such document to ensure expenses has been recorded. Next is confirmation. Auditors will obtain evidence directly from reliable external party. It helps auditor to verify the transaction happen is actually exists. Lastly is recalculation. Auditor will verifying mathematical accuracy in accounting records. This is to ensure the amounts such as depreciation, amortization, or salary are correctly calculated.
Hi, my name is Nuri Erdina binti Muhammad Faisal and my matrix number is 06D8023F1030. So next, I will present about audit's evidence related to expenses. First audit evidence is analytical procedure, comparing current period expenses trend with the prior periods of budget. Ratio analysis, for example, expenses to revenue ratio. Second is recalculation, checking the mathematical accuracy of expenses allocation, depreciation, or accrued expenses. The last one is observation. Observe process such as good receipt or expenses approval to task-related control.